All right, that's global market action, but how will these overnight cues impact our own markets? We have a research team joining in to tell you just that, what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, let me come across to you first. Not looking like a good start to trade today.
Well, absolutely right. Typically what you see historically is the fact that in the last week of December, you tend to see a bit of a rally across global markets, but this time around, that's not really happened. In fact, even yesterday, the US market close was very weak. The Nasdaq, in fact, fell over almost 1.4%. And, as you mentioned a little earlier, Tesla shares continued their decline, dragging the index lower as well. Fortunately, European markets were shut, so you didn't really see too much of negativity or any negative sentiments coming in from Europe. But remember, Europe opens today as well. Coming closer, to some of the commodity prices and how exactly they are expected to impact our own markets. Crude prices continue to remain quite steady. Brent prices hovering around the $85 a barrel mark, and WTI futures hovering around the $80 a barrel mark. Now, coming to our markets, Indian markets continued their up move for the second straight session, yesterday as well. And when you're talking about the broader end of the markets, that is where the real outperformance lied, for the second straight session as well. Nifty Metal Index on the back of China reopening, as well as some uptick seen across the entire metal pack. You actually saw metal pack doing very well. FMCG was the laggard. Interesting to see whether that particular trend holds today as well. Asian markets opening on the back foot. LGX Nifty is indicating a gap down for our own markets.
Yes, a gap down start. In fact, 84 point lower on the SGX Nifty now. Vivek, thank you so much for all those cues. Over to Surbhi now, who will list out all the stocks we'll be focusing on in today's trading session. Hey Surbhi, good morning.
Hi, good morning. Thanks for that. So today I'm going to be watching out for Welspun Enterprises, where they're going to hold a board meeting on 30th of December to consider buyback and an interim dividend. Next is RVNL, where the company is appointed as a project implementation agency for the UTF Harbour project in Maldives. The project cost is approximately 1545 crores. Next is Hariom Pipes, where the company has entered into an asset transfer agreement with RP Metal Sections to purchase its operating assets for 55 crores. India Pesticides, where the company's wholly owned subsidiaries, Shalvi Specialties Limited, has received environmental clearance for setting up a manufacturing plant in Uttar Pradesh. And lastly, Suryodaya Small Finance Bank, where RBI has approved the reappointment of Mr. Bhaskar Babu Ramachandran as the MD and CEO of the bank for the next 3 years, with effect from Jan of 2023.
Okay, so thin on news today as well. So that's what happens toward the year end. But of course, these stocks will be in focus. Finally, let me go across to Manglam, joining in with all the cues from the F&O space. Hey, Manglam.
Good morning. So now, as you guys pointed out, the SGX Nifty is indicating a sharp downtick at the open, almost an 80-point cut. As we speak, it's down to 84, 85 odd points. But the important part is that, is this dip going to be bought or not? Because yesterday we had a good trading session, and the Nifty ended around that 18,135 odd mark. The FI is sold in cash market, DII is bought as well. But again, gross volumes were extremely low. In index futures, on the way up, we got a lot of shorts to cover their positions, so almost 6,100 contracts unwound, whereas a 300-point bounce in the last two trading sessions led the longs to also book some of their profits as well. So as a result of which, the long exposure of the FII is absolutely unchanged at 47 longs and 53% short exposure. The key data point to watch yesterday was the net selling that we saw from the FIIs in index options, and most of that was attributed towards put selling. So the FII sold almost 2,300 puts for about 9,700 calls, 23,000 puts for 9,700 calls. Why is this important? Because in the last two trading sessions itself, the FIIs have sold almost 1.5 lakh puts, and that's telling you that we'll see firm support at the lower level, and the mid-cap index's outperformance also suggests that. The only thing to worry now is that the put-call ratio has now moved to 1.1 from 0.72, and levels upwards of 1.2 is usually when it indicates an overbought zone, and we do run the risk of running into some resistances, and the SGX Nifty is gap down takes away that fear. So the dip needs to be bought. 18,000 call saw a lot of covering in yesterday's trading session, and we saw a lot of writing in 18,000 put as well as the 18,100 put. So that's telling you 17,950 to 18,000, the levels where the market is likely to open, as indicated by the SGX Nifty, may find some support. Where are the resistances? At the 50-day moving average for the Nifty, just above 18,200, and for the Nifty Bank, just under 43,200, which is the 20-day moving average as well. And also watch out for a lot of stocks, because the mid-cap index has been outperforming, but in that we've seen Indiabulls Housing Finance and Balrampur Chini enter the F&O ban in yesterday's trading session, giving company to PNB, which is in ban already.
All right, okay, thank you, Mangalam, for that. So that's the power prep for the day. A lot of